Hello group. So today I'm going to go over just a quick example of a few transactions that go through using the worksheet for accounting. This is just, we're still making sure that we're using the accounting equation assets equal liabilities plus stockholders' equity. We put this in a worksheet format just so you can see what accounts are affected, like assets. We have cash, accounts receivable, and supplies. This is not the entire amount of assets. This is just a touch of them. Liabilities, accounts payable. There are still a ton more of those. This example is just using accounts payable. Common stock, how it is affected from your common stock, or your stockholders' equity is affected by common stock, dividends, fees earned, rents, salary, supplies, auto, and miscellaneous expense. So we're going to go through these transactions just so you can have an idea of how they work and how the actual worksheet does. So on April 1st, the current company, Morgan Jones, established a business to manage rental properties. So this is a service company. So we opened a business account with a deposit of $36,000 in exchange for common stock. Okay, so we always want to keep a running balance, because by doing that, we want to make sure our debits and our credits equal. So our accounting equation equals. So our assets are totaling like $36,000. Liabilities plus stockholders' equity, that is also $36,000. So we are in balance. We purchased office supplies on account. So we received office supplies, but when I say account, that's going to be our accounts payable. What this means is a vendor has given us supplies and they're saying, okay, you don't owe us the cash right now, you can pay us in X number of days. We'll be exploring that X number of days later down the road. But we do actually owe that, so we want to record that. So we still have $36,000 in cash. Bring down the $2,950 and the $36,000, and we have we are balanced, because $36,950, that totals $38,950, and these two total $38,950. C, we received cash from fees earned for managing rental property. We received cash, so $7,980, and fees earned of $7,980. Okay, our balance, we're going to add the $7,980. We're going to bring down our $2,950, bring down the $2,950 from the liabilities. We still have the $36,000 in common stock, and now we have $7,980 in the fees earned. So we could check here. This totals $46,930, and this totals $46,930. Hopefully you can see that down at the bottom here. Okay, in D, we paid rent on office and equipment for the month. We paid. So when we paid, we need to reduce our cash. And it was for rent, so we need to put it in as a minus. So we want to make sure that we do put it in as a minus, so we understand that that actually reduces any money that we have. See this? Okay, let me just do this. I apologize. Since I put that in as a minus, I have to do it will bring me down to $40,360. We still have $2,950 in supplies, $2,950 in accounts payable, $36,000, $7,980, and we now have $3,620. If I were to highlight my total assets, it's $43,310, If I total all of these by highlighting them, it's 43,310. So we are still in balance. E, we paid creditor on account. So remember when I said that we have accounts payable where we owe money later? Well, we're actually going to pay some of that now. So we reduce our cash by the 1,340, and we're going to reduce our accounts payable by the 1,340. And I'm just going to auto sum these. It didn't work, I guess. Let's try this again. Auto sum those. Okay. I could speed this all up, drag this down, and then that will give us our new totals. But I don't like that it puts zeros in where it doesn't belong. Okay. And I get that. Okay, let's ignore that error. Okay, so if I were to add up my assets, I'm looking at 41,970. My liabilities plus stockholders' equity is 41,970, so I'm still in balance. F, billed customers for fees earned for managing rental property. So when we're billing customers, we're saying, okay, we're going to bill, we've completed your services, and we're going to give you a little bit of time to pay us. So that for us is an accounts receivable. So billing customers, it creates an accounts receivable for us, and that is a positive. And we can, for fees earned, that is also a positive. So we did not affect cash. We now have accounts receivable. We still have our supplies. We still have what's left in our accounts payable. We have common stock at 36,000. Now our fees earned, adding the 7,980 to the 6,700, and we still have our minus 3,620. If I add these three up, it's 48,670. 48,670. We are still in balance. Okay, let's look at G. Paid automobile expenses for 800 and miscellaneous expenses for 400. So that means we took cash out for $1,200 and we applied it to auto expenses for 800 and miscellaneous expenses for 400. So what that means is we reduced our cash to $37,820. We still have our accounts receivable. We still have our supplies. We still have our accounts payable balance out there. Our common stock, we have $14,680 in fees earned. We still had our rent that we paid. And now we can add negative 800 and negative 400. Those total 47,470. 47,470. So we're still in balance. H, paid office salaries. So we paid our office salaries expense. I think they would appreciate that. So we reduce our cash. We come over to salaries expense. And I forgot to put that as a negative. We put that as a negative amount. So then we can check our balances and see that we still have those accounts. So you'll want to make sure that you put those in and so forth. Notice we don't have to put anything in if nothing is there. Our assets equal 44,920. Our liabilities plus stockholders' equity equals 44,920. So we're still in balance. I, determine that the cost of supplies on hand was 1,740. Therefore, the cost of supplies used was 1,210. How this works, on a monthly basis, we go into our supply closet and we look at how much do we have in that closet. We have $1,740 worth. So we need to get our balance to that. So we reduce our supplies And we have a supplies expense. Oh, that's not going to work, is it? Negative 210. So we still have the 35,270, the 6,700. Now, if we were to find the new balance, imagine that is at the $1,740. Okay, so we want to bring the supplies at the end of each month. We want to bring that down to what we actually have. Okay, and we'll go over more details of this as the semester continues on. J, we paid dividends 2,410. So we paid out some cash. Dividends are our common shareholders have invested $36,000 in us. We need to actually give them money for saying thank you for investing in us. Okay, so it does decrease your cash account. We still have our accounts receivable. We have our supplies in hand. We have our liabilities. And if you notice on the bottom part, I am grand totaling all of this. We have 36,000, a negative 2,410, 14,680, negative 3,610, negative 2,550, negative 1210, negative 800, and negative 400. Do our assets equal our liabilities plus stockholders' equity? Yes, these are our assets. They total 41,300. Our liabilities were 1,610. Our stockholders' equity was 39,690. I added these two together for the total of 41,300. We have our balance is still correct. So this is just a good example of doing accounting in a worksheet format just to get you to make sure you follow that equation. Assets assets equal liabilities plus stockholders equity, and you always want to make sure you check your balances. This is not all of the accounts. We are just getting you started with this type of format. We will in the near future change the format, but we're still just getting you used to understanding that equation, assets equal liabilities plus stockholders equity. I want to thank you for watching this and have a wonderful day. Thank you.